Hello, nieces and nephews. Looks like the chop is finally over. We did had a little breakout from last Friday, but that was a bougie little breakout we had. Look at that. This was last Friday's breakout. That was a bougie breakout. Definitely did not trust that breakout. It literally happened at the last minute. Woo! But look what happened today. Look what happened today. Uncle Charles talked about this in the Discord. We prepared, guys. We prepared. I wrote here, with the August chop, can September be more directional? That was the question. If it's bullish, 561 and 563 must clear, putting those high targets in play. If 559 fails, bearish with those lower targets in play. You guys can see on the 15-minute time frame, holy moly, donut shop. It was a beauty. You see right here, boom. Oh, the arrow point the wrong direction. Boom! Broke down my 559 level right there. I'll change the color to yellow. You change it to yellow. Broke down 559. Did not look back. Look at that. Broke down 559, 557. But the big one was how it broke down 555. Got that daily chart close. You guys know it was a buy zone for multiple days. 1, 2, 3. 3 times 555 defended as support. But on the fourth try, did not work, guys. We did have the breakout, but we had the gap down. That was a false breakout. Started with a false breakout. Breakdown at 559 level. Boom. Broke down 555. It also broke down a fib level, 553.4 on the daily chart. The chop phase is over. The bears ended it. As of right now, as long as below 555, Uncle Charles is leaning bearish. Okay? So if the second half of August was the contraction phase, it looks like with September here, we have entered the expansion phase. And right now, it's looking like a bearish expansion phase, guys. What I'm going to say to you guys is this. Since 555 was the bottom of the chop range, and we broke it down, I'm going to stay bearish as long as below 555. Do not trust any bounce as long as below 555. Bulls got a lot of work to do. They need to recapture 553.4 and 555. Bulls need to recapture both levels. If Bulls cannot recapture 555, I am going to stay bearish. Short the bounce would be my strategy. Okay, false breakout setups, rejection from resistance, breakdown of supports. Those would be my entries. As long as below 555. If you're already holding puts and you're swinging, hopefully you're swinging runners. I would say this. Keep holding as long as below 555. All right. Triple Q had a nice, beautiful move to the downside as well. I do cover Triple Q in my Discord, guys. First post I wrote this morning, 472. Oh, that's the wrong one. First post I wrote this morning. Bulls need to keep price above 473.2 to be bullish. Clearing 474.7, 476 would be bullish follow through. If 473.2 fail as support, 472, 470, and so on would be in play, okay? And yeah, you guys can see we broke it down. We broke down 472. I also wrote 472 is current resistance as long as below 470, next target and support. No calls unless 472 can recapture. And then I wrote 470 is lost at 10:18 a.m. 470 is lost. I alerted that the level was lost. And man, it just all the setups just worked beautifully for the Triple Q. I'm going to tell you this. We lost another fib level, which is at 466. I'm overall bearish below 466. I do have resistance at 462 and 464. So if there is a back test, those levels must clear. The back test 466. I cannot favor a bottom is in unless 466 can recapture. Otherwise, the next support is at 460. And if that fails, 458 and 456, which is the next fib level, is in play. There is a gap all the way down at 451.6-ish, guys. All right? No bounce unless 466 can recapture. Stay bearish as long as below. Tesla, what is that? A dark cloud candle or some type of variation of it? Either way, it's looking bearish. And if the next support at 210 fails, we're bearish. More downside incoming 208, 206, maybe all the way back down to 203. That is a big possibility. If there is a bounce, 212, 214 needs to recapture to put a back test of the fib level. at 216 in play. All right, I can't trust no bounce. I can't trust no bottom is in unless 216 can recapture. NVDA, man, those banks were saying that they had a 150 plus target, 155 price target. I'm so glad I didn't listen to them and I listened to the price action. Today it broke down another fib level, which was at 115.7. We broke it down and murder was all she wrote. Holy moly. As of right now, it's around 105. I do have a level at 107 and a fib level at 108.3. Those need to recapture to put 110 or above in play. I can't trust no bottom is in unless 110 can recapture. Okay, overall bearish below 108.3 and 110. Okay, next supports at 104 and 102.5, which is the next support level. Those levels fail. 100.6, 99 or lower is incoming, guys. Price action is looking bearish on NVDA. You need to recapture 108.3 and 110 to trust a bounce. IWM. A few videos ago, I talked about the bearish counterattack that came right over here. The bearish counterattack from August 23 into August 26. And it definitely, in my opinion, aged very well. All right, because the bearish counterattack was never, I repeat, was never invalidated. IWM needed to recapture 220.5 for that to happen. It never recaptured it. Broke down this support level. It had an inside candle setup from last week. I mentioned if 217 fails to get bearish, and it was a great setup. All right, as of right now, guys, 215 and 217 are resistant. Trust no bounce unless 217 can recapture. As right now, Uncle Chartist is bearish. Supports are 213 and 211.8. If those levels fail, we can go for the gap fill, which is all the way down at 208.5. Possibly even lower than that. All right? If we're going to get bullish, got to recapture those lost level. 215 and 217 needs to recapture. Otherwise, stay bearish. Let's get to the dog pool. So I'm looking at dog pool from August 30th to today. Most of it, look at that. Look at where most of the activity came in. Billions and billions of dollars coming in around the top, 563.95 down to 563.8-ish. Millions and millions of dollars. Billions. You guys can see where how the market responded around those zones. Now it's looking bearish. So it looks like, based on what the price action is showing us, look like big money, look like they were taking profits. But we know where the levels are, the dark pool levels are. Can't favor new all-time high unless SPY can somehow break through this zone. But a lot of big money players decided to take profits up there. Another one's at 558.22, way below that now. Oh, there's one at 1.9 billion at 551.99. You can round it around to I have a support at 552, so you can definitely add that level to your chart. That's around where we are right now. So we're seeing billions in premium coming in around that level. Are they looking to buy or are they dumping? You can see the price action attract to these dark pool levels. Interesting how that happened, because remember, there is a 24-hour delay. So these levels are, these market makers know about these levels way before we do. And they're pushing it down to meet them. So if someone's buying the dip, trust it if 553.4 and 555 recapture. Otherwise, you break down 552, more downside incoming. Combining that with the dark pool, triple Q. You guys can see that most of the activity came in at 476.68. There's a 470.6. That's where most of the activity is coming. To the downside, to the low levels, 461.8 and 461.7. The big money's been busy. NVDA, 70% of activity came in at 119.37. That's from the end of last week to the beginning of today. Yeah, 119.37. Yeah, they dumped it. They taking profits. Tesla. 210.6. We're way below that. Yeah, over 72 million in premium. Oh, we're actually, yeah, we're around there. So I wouldn't, yeah. I mean, I have a 210.6. I have 11. That's around where they close. 210.6 is where they close today. So you see where they're hitting those dark pool level guys. So if we break down 210.6, we go below, you know that these guys are taking profits. They're dumping. But if you can get above, it's a sign that, there was an order there. In order to be buyers, it has to be sellers. So if we get a bounce, somebody may have bought the dip today. Got to get about 212, 214, like I mentioned. All right, and IWM looking bearish, but what's dark push on 220? Yeah, I think we're way below 220 now. We rejected around there, actually. Dumping 219.2. You guys see what the zone is, but the lower level, 213.35. And where did IWM close today? At 213.35. You guys see how it correlates with the dark pool levels? That's amazing. So the question is, were they buying or were they selling? So the market makers pushed the price down to meet their orders. So if it was a buy, you'll trust it if 215 and 216.7 fails. If it's a sell, they were dumping, then obviously we got to break down more support level. Right? 213, 211.8 will know, hey, big money's dumping. Let's follow the price action. Big money's buying. We capture levels. Let's follow the price action. Okay? All right, let's take a look at the flows. Last time we checked the flows, guys, it might have said bullish, but when we take a deeper look into what's being bought and what's more aggressively being bought, like above the ask, we see that there was more aggressive buying for puts. So let's take a look if that's going to continue. We got a call here for expiration date for tomorrow. So what I try to look for is for out the money. Whether it's calls or puts, I consider it aggressive is above the ask and it's out the money, whether it's calls or puts. So we're looking at SPY. We know that SPY is around 550. Where did it close today? 552-ish today. So I want to see something out the money like this right here. Got calls 605. Now this is a little bit long here for March 21st. It's really long. Far out, man. I mean, I know it's out the money, but they have a lot of time. They entered around 553.5-ish. It's actually around my support level. Interesting. But yeah, they got plenty of time. So that's something that sticks out to me right there. And we're looking some more. So here's another one that sticks out to me. Still aggressive put buying here. 545 strike price. That's $10 away for September 30th. So even though this call is pretty out the money, but it's all the way until March. You feel me? When we have this 545 strike price above the ask for puts, September 30th, it's a little closer, right? It's a little closer, more shorter term. So to me, I take that very serious. As a short-term trader, I can clearly see that the more aggressive, the big money's betting to the downside. Here's another one. Came in today, this morning, 535 strike price. They entered around 558.64. 535 strike price for September 20th. So they have plenty of time, and I'm pretty sure they're up a good amount right now. I hope that they are. 540 strike price. You see that? 540 strike price for September 30th. And another one right all the way down here, 532 strike price for October 18th. So we clearly see that this big money going in very aggressively to the downside. Okay, guys? So that's what big money's doing. What's big money doing on Triple Q? Now we see that it's bullish, but let's see the context here, right? So we got two calls right here. 462 strike price, right? 462 strike price, okay. Above the ask, but here's the problem. September 4th is the expiration date. I don't take that very serious because it's expiring tomorrow. Okay, they probably lost money on it. But something a little further out the money, a little bit more time on it. So here we have somebody bought puts. 449.8 is the strike price. That's a weird strike price. But 449.8 is the strike price. They bought it for September 20th. You see, this is what I'm talking about, guys. Even though it says bullish, having cheddar flow is a big advantage. And if you're a tier 3 member of mine, it's the big advantage especially if you're a swing trader, because it might say bullish, but you look at the content, look what it's showing us, that the big money plays are aggressively buying puts. This is what they were doing last week before we had the dump, right? We saw, if you watch my previous video, you check the option flow section, we covered this, how the big money bears were aggressively buying puts. And look what happened today. So now we are seeing some more. All right, 449.8 strike price for triple Q. All right, that's double digits away. 450 strike price. 445 strike price. These are sweep orders, guys, above the ask for September 20th. So we got some big money plays aggressively betting to the downside. As far as calls go, we got one hit. See, 470 strike price, but look, September 6th. I don't take that as serious because it's shorter term. But bulls. Yeah, bulls. It looked like more money went to bulls, but you guys see it. Look, see, September 3rd. People were day trading these contracts. They were buying same day expirations. They most likely got cooked so bad. I don't know. Maybe they were hedging. But if not, they got cooked very badly, guys. Okay? So even though it says calls, it can be very misleading because of stuff like this. This doesn't matter to us. This doesn't matter. Okay? So I would say both on SPY and triple Q, bearish. The bears are winning. Okay, as far as aggression goes. NVDA is bullish. Let's see the puts. September 6th, 94 strike price. Whoa, over 10,000. See, there's over 10,000. So it's a few days, 3 days. 94 strike price. So you guys see that. It says bullish up here, but look at that. 94 strike price, over 10,000 in size. That's aggressive. Somebody's expecting, it's Tesla. Somebody's expecting a lot more downside for NVDA. We got some calls though. November 15th, 130 strike price. That's very far away. That's far away. And June 20th strike price, 136 strike price. That's very far away, guys. Not aggressive. Even though it's out the money, it's not aggressive because of how much time they have on the contract. This is for December 19, 150 strike price. So that's a block order as well. Okay, we got puts 100 strike price, but that's for December 20th. I want to see something more shorter term. Out the money, shorter term. You guys know what I'm looking for. Yeah, nothing that really sticks out to me, but I'd still say based on the September 13 and it looks to me it's more bearish. Even though it says bullish, it looks to me it's more bearish as far as aggression goes. So flow sentiment's bullish. Let's take a look at the context. So we got some calls coming in for March 21st, 200 strike price. Wow, that's very in the money, and the expiration date is out there. I don't know if those are hedges or what. And if they are hedging, it could be actually bearish, guys, instead of bullish. Tesla's around 209-ish right now. So I'd like to see something out the money. Nothing that really sticks out to me, guys. We do have some calls here, but they're all short term. Maybe they're expecting a short term bounce or something like that. Yeah, I'm seeing a lot of calls. They all got cooked though, but they do got time on. They do have some time on it. A lot of September 6th, a lot of calls for September 6th, guys. All right, and let's see IWM. Bearish. IWM is around 213-ish right now. Yeah, I'm seeing a lot of in the money, at the money positions. Although this one, October 18, 210 for puts. They entered around 215. So they're definitely up a lot on it. Their strike price already struck. Almost. It didn't quite, but I'd say that's pretty aggressive. I would like to see more out the money, but you take what they show you. All right. So overall, in my opinion, guys, based on checking the context of the flows, it still looks bearish. And as far as the price action goes, stay bearish as long as below 555. Why? Because the chop phase is over, and it's over bearishly. All right. I hope you guys found value in today's video. Please consider joining my Discord, and you get my best analysis throughout the day. It'll be fun. to make more connections. All right, you gotta have a good one. Peace.